Disruption has been a very big topic in the industry at the moment, and a lot of companies have to deal with disruption on a daily basis, and it can mean different things to different people. I'm joined by Volker and Widdern from Constantia, just to talk about how this can fit into the market. Volker, thank you very much for joining us. Can you just discuss then how disruptive technologies is affecting insurers and how it's affecting brokers and how they can adapt to it?
Sure, and I'll give one or two examples and let's see how things evolve. I think disruption happens when a business model that you think is going to last a little while changes suddenly. We talked a little earlier about fiscal cliffs, so things where you go to a tipping point. The tipping point could be that you used to convert 20 out of 100 sales, now you're only converting 2, or your competitors converting 50 out of 100 sales and you don't know why. Another element of that is saying, but how do you access the market? And I think that's the biggest element of disruptive, because the example of Airbnb is a classic one, and we'll bring it back to insurance. Now, everyone thinks that's disruptive, almost that it happened in an instant. But Airbnb failed for 8 years until they decided to copy, inverted commas, Craigslist. Okay? So that was an element where they were trying to do something, and they just realized that if they could put their app inside the Craigslist app, people would come to them looking for accommodation. And Craigslist went 80% tipping point to Airbnb, and now the rest is history. 8 years of suffering to get to that point. But that is a disruption. So a significant element of that in the local environment is saying, well, how does the standard model change in the context of people thinking they're going to insure one car at a time or one personal lines policy at a time and things like that? And let's use the word virtualize and Uberize maybe in the same context. And Uberize or virtualize really talks about doing something, but not having access to the asset, control of the asset, but getting some value from that environment. So it's the shared economy. And in that context, you say, well, okay, well, how can I get to a different kind of shared economy? And you talked about brokers for a second. Well, at the moment, people think that if they want insurance, they go either direct or to a broker, to an insurance company. But what if they went to an entertainment company? What if they went, not even went to a bank, they went to a social circle, like peer groups or something like that? That's a bit of disruption. And so in the shared economy, people say, well, look, if I trust a brand, if I go to Edgar's now to buy my personal lines, you may think that it's old-fashioned or whatever it is. But there are new payment technologies that are coming along where you've got these virtual wallets, and people are willing to transact in cash because they want to demonetize their cash, put it onto a wallet, and then move from there. So one of the things that we're looking at is how do we transact in those kinds of spaces where people have removed themselves from the normal economy, and they're saying, oh, that's nice. If I'm going to buy a pound of sugar and at the same time I pay my funeral premium or something and I trust my wallet, I'd rather do it there because I can see it on my wallet. Completely different paradigm.
It definitely is, but I think a new paradigm that we have to think about, and it's probably a new risk that we have to think about, is how do we manage personal information with regards to this? We know about the GDPR in the UK, we know about POPI that's coming in South Africa, so now you as a company have to be very responsible about how you manage the information about this within the shared economy, because the shared economy is going to stay.
Yes.
That's nothing, it's not going to go away, but how you manage that information is going to be important in the future.
Well, and there I think we have to say, how will it work and how can it work? So let's say we go back to cars and say, well, are we selling insurance to the passenger in the car, or are we saying to the passenger, you have a better protected ride with me? So there's no passenger information, just the whole ride is protected. So now when the passenger's details is known is maybe when there's an accident or not or otherwise. But I know the ride economy because I've got all the shared cars in front of me. That's true. I haven't breached any confidentiality or anything like that. So it really depends on your point of view. So you don't always have to get 100 line items of data about every single customer before you can offer service. So in the same thing with the wallet economy, we can say all these wallets are protected by Constantia. Okay, until now, then you accumulate value in a certain way. Would you like to now willingly adopt that value? Are you willing to share the data? Everyone's willing because they've been granted value from day one.
Maybe let's just then finish off with, now this is obviously going to cause a major headache with regards to pricing. How do companies and insurers price a car ride as opposed to that vehicle? People are sharing cars, people are sharing technology. How do you price that?
Well, I mean, we already have an on-demand service where we price per kilometer. So rhetorically, we know how to do it because we know what the minimum premium is from a catastrophic point of view to the variable premium over time. So it's actually quite practical. You would look at the average use of a car, under which circumstances, and of course you're going to win some and lose some, and you've got to pay for that premium. at the end of the day, the incremental cost of pricing a unit which is not used all of the time, it should be about half the price of using it all of the time. But when the volumes go the other way, you can actually reduce cost. So the practicality is, on what basis will you get ruin? In other words, I'll lose the whole car. And on what basis do I need a wear and tear? Okay? Yeah. And you allocate that by kilometer, by day, by night, however you wish, and you carry on. The same applies to other consumer goods, like even as low as shack insurance. So we want to deliver shack insurance through wallets, where we may deliver 5,000 Rand of value, but not in money. We may deliver it in building materials and things like that. And we can price that also based on a day-by-day basis.
I suppose it all comes back down to a tipping point and what actually works for your business. Volker, thank you very much for joining us.
Good to see you.
Thank you very much. Good. Thank you.